rest inside this bitch. Nigga, don't move wrong. You could lose your life inside this bitch. Nigga, I got 2 phones. Cuddy hold me on my dick. Walk there with 2 poles. Even though these niggas, they ain't no shit. We like the groove home. Hold on, 2.
Hey, welcome back to another trade recap. Today, guys, we're going to talk about what happened in the S&P 500. Let's do the trade recap that I did. I just made 10 gazillion euros with this trade, so I'm going to teach you guys how you can do it too. So, yeah, I know this is a little bit messy, but I'll try to explain it as best as I can. Let's go 4 hours on both of them. So, I don't even know. Okay, this is good. Okay, so what happened? I don't even have market open or whatever. Can I just type? Like, no, I cannot type anything. So, okay, it's okay. So, pre-market open, we see out these highs, and then on 4 hour, and we have these lows, and these are the lows. So, you know, we don't really have a strong bias on both of them. You know, we just sweep out these highs, you know, and yeah, on pre-market, and it's very messy. So we go to the 1 hour. I'll try to explain it as best as I can. This is a bit of a mess, but I'll try to explain it as well. Yeah. So yeah, this 4 hour highs got swept pre-market. We have these hourly lows, which were right on market opening, and then we have also these hourly lows, these 15-minute lows, and then this 1 hour follow gap and whatever on the Nasdaq. On the S&P 500, on the 1 hour, we sweep out all these highs. So, you know, in my head, it's like, okay, we just sweep out all these highs. So we no longer have like draws on liquidity to the upside. So what are we going to do? We are going to do down. And what happens? We go to 5 minutes, market opens, and we shit the bed. You know, it's exactly what I was expecting. But then, on the 4 hour, we are bullish, and we are actually feeling on market opening. We are actually now feeling 4 hour fair value gap and 1 hour fair value gap. So which are key levels to our strategy. And not only that, we are also forming 15-minute SMTs right here. You know, if you see this SMT, which is 15-minute SMT, I'll go to the 5-minute to 15-minute to show you guys as well. We are forming 15-minute bullish SMTs. And I'm always explaining this, but I'll explain it again. What is an SMT? It's basically when Nasdaq forms a lower high. In this case, a lower high, yes, and the S&P 500 forms a lower low. You know, so what basically is telling us is Nasdaq is telling us the future. It's telling, hey, I want price to go higher, and the S&P 500 in this case is a lagging index. It's like, okay, the Nasdaq is already going higher. I need to go higher as well. That's basically it. That's basically an S&P divergence. If you want to know more about it, search for it, and you'll know about it. So, based on that, we are not willing to trade on the Nasdaq. We're going to the S&P 500, but I'm getting a bit ahead of myself. Let me just explain my thought process. So we see out these highs. We want to go lower. Macro opens. We're going lower, but you know, my targets were these 15-minute lows and these are the lows. But then I'm like, damn. Macro opened and we already filled my targets, so I'm not really willing to take bearish. And my bias for the day is bullish because 4 hour is bullish. The daily bias is bullish. So yeah. And that's when I switch my bias from bearish, because we already swept my targets, to bullish. Because hey, not only we have swept the targets already, but in the S&P 500 we are filling 1 hour and 4 hour imbalances, which has the potential, when we hit these imbalances, to go higher the price. Not only that, we are forming a bullish SMT, and not only that, you know, we also see reactions out of it. So yeah, you already know we're not trading the Nasdaq because hey, it's the non-lagging index. So we want to go to the lagging index. It's S&P 500. We go to the 1 minute, and price was very choppy today. So macro opens. What happens? Price moves up and then down, and we are feeling this parallel gap. We formed the 15-minute SMT confirmation confluence. So and then yeah, what do we see out of that? Now what I'm waiting for? I'm waiting for continuation confluence. It's either a break of a confirmation confluence, break of shush, reverse parallel gap, whatever. You know, I was initially, because we didn't have any clear draws on liquidity for the upside. Like we have these 5-minute highs, these 5-minute highs. I believe these are 1 minute highs, but hey, like there's no clear like hourly draws or something we are aiming towards. So initially I was like a little bit skeptical of going to the 1 minute. So yeah, I just went to 1 minute after, because I thought like, okay, price will probably want to go higher and I'll enter on 1 minute low risk. And then once we get all the 5-minute confluences, I'll enter with 5 minutes with more risk. And that's exactly what happened. That's why you see two trades right here. But let me try and explain it to you guys. Let me show if I can just, no. I don't know how to, yeah, this is okay. It needs to be this way, guys. So we have here order block, breaker block. We have order block right down here. We have equilibrium on these lows up to these highs, and then price comes down into equilibrium, order block, breaker block, filling all our confluences except fair value gap. We actually have 1 minute tiny fair value gap right here, which gets filled, but hey, I'm not looking at that. Now what we want to see, a break of structure and inverse fair value gap. We don't get we have a tiny inverse fair value gap right here, but I'm not willing to trade on that. I want to trade on a break of structure. Why? It's a little bit stronger as a confluence break of structure compared to fair value gap. And this fair value gap, inverse fair value gap in this case, is super tiny. So yeah, it's just the way I trade is a little bit of market intuition, but hey, it is what it is. We get break of structure right here, enter on that, stop loss below order block, take profit 1 on these 5 minute highs, and then take profit 2 on these other 1 minute highs, and then take profit 2 all the way up here in these 5 minute highs. I can show you. These are 5 minute highs, yep, exactly, 5 minute highs, and then the other 5 minute highs all the way up here. What happens? Price hits TP1. I took partials, I took 30% of my trade off right here, and then price hits break even, and it's okay. Why? Because we are forming 5 minute confluences for another trade. If I didn't took partials, price would have gone up and did all my trade profits, but hey, I took partials, and then I put the stop loss into break even, risk-free trade, and then I got stopped in break even. So yeah, just made like a small amount on that trade. But then hey, what do we form? After that, we have this 5 minute, let me try click on it so that you guys can see it better. We have this 5 minute fair value gap, which you are actually feeling. We have a retracement into this 5 minute fair value gap, and now our 5 minute confluences are playing. So we have 5 minute order block, 5 minute order block, 5 minute breaker block, all these marked down, price retraces into it, you know, where we go to the 1 minute. What do we see? 5 minute fair value gap gets disrespected. But what are you feeling next? We are feeling not only equilibrium, from these lows up to these highs, we're also feeling order block, and we are feeling 5 minute order block and 5 minute breaker block. When do we enter? Reaction out of that. When do we enter? I actually entered on inverse fair value gap out of that, and the break of structure out of that, which happened in the same candle. So we have the break of structure right here. These highs, they just got broken out, and this inverse fair value gap, which also got broken out on the same candle. Enter on that. Stops. I put my stops below this low. It's not even a low. It's this candle weak because the low is all the way down here. And as you can see, the risk reward ratio wasn't great. I should have put way more tight, but hey, I wanted to put a little bit bigger so that I could have a margin, because price has been moving so much. I just prefer to put my stop loss a little bit below and be a little bit safer rather than put super tight and get screwed up. Take profit ones, I put it in these 1 minute highs. I didn't put in these 5 minute highs because they were super close to where I entered. We get this big ass candle. I took 80% of my trade right above here because candle went all the way up here. It was moving so much, you know, I got a lot of notifications, closed 80% of my trade, put stop loss into break even, and then the rest is just running all the way up. It's TP2, and then yeah, that's it for the day. You know, that's basically the trade. You know, wasn't a bad trade. It was a good trade. You know, 2 trades for the day. You know, not only the aggressive strategy, 1 minute strategy, but also the 5 minutes played off nicely. Good bias, you know, good entry as well, good confluences, and good confirmation. Again, you need to wait for confirmation. My friend you know, he lost he made some money yesterday, got break even, but you know, he lost some money on Tuesday. He won some money yesterday, and then today he actually is winning quite a bit of money. You know, he entered 2 trades as well. First trade, he entered off reaction of this fair value gap. Why didn't I enter here? I wanted to see at least this inverse fair value gap getting validated before entering. Because even though this is a 5 minute reaction out of a fair value gap, you know, on the 5 minute strategy, to be safer, you wait for the 1 minute break of structure or inverse fair value gap. In the 1 minute, no, you are waiting just for a candle reaction, but in the 5 minute strategy, you are waiting for a little bit more of a confirmation. My friend entered on that, got stopped because he got big ass candle to the downside, but then he entered again after getting some more confirmations, same trade as me, and now he's up like I think €600. $600, so it's actually quite a nice trade he's taking, and yeah, he lost 300 in the first trade. He's making 600. I think he's going to end like today 400 plus positive. So yeah, price action hasn't been great on Monday and Tuesday, but hey, Wednesday and today just very good price action. Not very good, but better. You know, I was able to put some trades in, you know, and this is great because yeah, you know, last few days, and yeah, it looks like price is going to hit TP2, so a little bit more money as well. So yeah, no, yeah, just a shame because on Monday and Tuesday, and even last week, there wasn't many days you could trade. Price was just a mess, but hey, this week is giving us very good price action. Wednesday, yeah, yesterday and today, very good price action we could trade. You know, price is set to it is TP2. I'll manage my position as well. Once it hits TP2, yeah. But that's basically it. You know, just very good. Yeah, good risk management, good control of emotions as well. You know, closing take profits and setting it to break even, not moving my stop loss, controlling my emotions. That's very good. You know, and very good bias. You know, because again, you know, your objective is not to make money every day. Is to predict price action based on, let me close position. Yeah, it's done. Yeah, just close my position. It's based is to predict where price wants to go based on a daily basis, based on probability. That's what really what you want to do. Not you not really want to make money every day, because if your goal is to make money every day, then the day you lose money because you did a mistake, or you know, maybe market wasn't that good for you that day, you'll just trade and trade and trade again until you make money. And guess what? You're going to blow your account, you're going to over leverage, over risk, and your account is going to get blown. So when you lose in the markets, you need to be okay with it and say, okay, I'm done for the day. I'm going to learn from it, obviously. Journal your trades, journal what you did wrong, and then you improve on that and you get better. Because guess what? When you do a mistake and you lose money in these markets, you just paid for a lesson, bro. You made a mistake, you paid for a lesson, and guess what? You are never going to do that mistake again because you learn from it, you know? And yeah, that's basically exactly what happens. That's exactly what trading is, man. And bro, it looks like it hit all our TPs this trade, and it's going to go even higher. So, you know, if this doesn't show you that price action is good, you know, I don't know what will. But yeah, price action is getting better, you know. And yeah, you know, hopefully tomorrow is good as well. I think we have news or something. But yeah, we'll see, guys. You know, let me check. I think there's maybe news. Yeah, there's some news pre-market. Let's see how it goes. But today was a good day. We had also news, I think. Yeah, pre-market as well. But yeah, very good day, you know, honestly. Yeah, just thank you guys, you know, again for the support. Comment, leave a like, say something, and yeah, you know, if you enjoy these videos, comment and share it to your friends. So yeah, thank you guys. See you on the next one.